Welcome back to the channel, guys. So we are back with another video, and we are going to be talking about moving averages. Now, moving average is an indicator on the chart in the markets that we use to try to identify trends, to try to identify average prices. We try to determine supports and resistance depending on these moving averages. Now, we are going to look at a couple of them right here. So we have simple, exponential, weighted, and Hull moving average. So simple is basically the simplest. It's a moving average calculated by taking the arithmetic mean or the average of a price across a specific time frame. So you can ask for the charts to give you an average price for the last 10 days. So they will plot a line against the graph right here, against the chart, to show you the average price at this time depending on the last 9 or 10 days you have selected. Now, simple moving average is basically like that. So the exponential moving average, the difference is for the exponential, it tries to give more weight and reducing the lag in the simple moving average. So there is a little bit of difference. So you can see every time you plot a different indicator, you can see that there is a change on that line. For example, moving average exponential is right here. We are going to plot it in a different color to try and understand what we are talking about. 21 style, let's put in yellow. Okay, so the yellow is the exponential moving average, and the white is the simple moving average, the smoothed moving average, and the blue one is the Hull moving average. So exponential is a little bit different from the weighted or simple moving average. So here we're looking at the weighted moving average. This adds a lot of data onto every point, whereby you see more responsive price changes than the first one, which is the simple moving average. So we have also the Hull moving average. This is new and is a little bit better than the other, but we are going to see why and how do we use it. So the Hull moving average, you can find it on TradingView. It's also an advanced type which is designed to reduce the lag and improve the smoothing. It combines everything else we have talked about and put it into one indicator. You can see the applications of how to apply everything. You can read about all this on financestrategists.com. Okay, let's go back to our chart. Now we are going to remove the exponential moving average, and we are going to leave only two to try to understand better. Now, one of the white one is the smoothed moving average, and the blue is the Hull moving average. How can we use these two in a combination to try to get a confluence of indicators to confirm our entries after doing the technical analysis? Remember, never use an indicator independently to make a decision. As you can see here, let me see. I think there was a disclaimer they always put every time they talk about an indicator or oscillators in the market. I think they didn't put any disclaimer on this one. But normally there is a disclaimer trying to remind you that never to use such technologies independently. You have to couple them with a lot of other technical analysis factors before you make that decision. Okay, let's try to understand how you can use this or to the best of your advantage. Now, this is GBP AUD, the 1 hour chart. We are going to try to see how can you get entries from these two moving averages. So we have an upward trend right here that, let's say, the trend stopped around there. But at this point we had we had a resistance that was strong for a very for a couple of days, for some time there, and we had a break and retest, a break and retest from this, which took 5 days with a huge resistance, and it became a huge supply before the price broke to the downward side. So a break and retest of this level was a very good indicator that you're going to have a change in the market structure. Okay, now here look at the moving averages. This is a 1-day chart, and I'm using the 21-day moving average. Now we have the HAL indicator, and we have the smooth moving average, the HAL moving average and the smoothed moving average. Now these two, look at how they show you a support, a resistance on the chart. Now the 21-day moving average, which the smoothed 21-day moving average, is showing you on this red candle right here. Let me try to zoom in. It's showing you, let's try to put an ellipse on this. It's showing you that this is the price. This is the candle where we have a setup right there. So how do we look for this? Let's put the supports. We have a support here and a break and retest of this support. As you can see, you have that support right there. Support, 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 break of support, retest. Now this becomes a point of interest, and look at how price reacts when it comes back to the point of interest. A huge rejection to the downward side. Now this first, we have a confirmation from break and retest of this zone, and second thing, the indicator is showing that we have a sale right here. But coupled with our analysis of support and resistance, this is a confluence and an indicator that they were going to sell. Now if we factor in the HAL moving average, which is very close to the candles right there, you can see that the HAL is showing a second candle confirmation. On the second candle, the HAL moving average, same day, 21-day HAL moving average, is showing a rejection exactly on the 21-day. Now what does this mean? This means you have a double confirmation, which means if you open a position right here, keep your position, it's going to fall even more. Let's try to look for another setup like this. Okay, so price is moving down. Now we have another one right here. For example, we had a support created here and break. Support, support, break and retest. Now at the retest of this support, we have a confirmation of engulfing. As you can see right here, we have a confirmation, engulfing confirmation right there. Support, support, break and retest of this support zone. You see that engulfing right there on the 21-day moving average. This is the smoothed moving average. We have a confirmation, and if you look at the HAL moving average, it's a little bit above, but you see this is the first candle below. Now this too is a double indication that price is going to fall further. And look at how price react the following day early in the in the Asian session. See how the price fell in the early Asian session of the following day. It didn't fail on the same day, but exactly you saw a resistance. There was no push back to the upward side and price fell. Now this shows you it's a double confirmation for two different moving average showing you the same exact thing, and they are coupled with your analysis of support and resistance. Break, support turning into resistance after it has broken. This is a huge indication that you're continuing your trend to the downward side. Again, you can look at another point right here. You can look at another example right there. Support, support, break of support and retest. Now this is a retest and an engulfing from the 21-day moving average, smoothed moving average, and the hull moving average. This is a double confirmation, and try to look at how the market reacts in the following days right there. After this, the following day, we saw a huge impulse to the downward side. Now this works both ways: downward trends, upward trends, anything. There is no exception. There is no exception. Now if we see a double confirmation to the upward side, you will see more buys to the upward side. We can look at it in the examples right here on the side of bearish market. Let's see where we have a double confirmation. Where do we have a double confirmation? Double confirmation here. Where double confirmation? Double confirmation right here. So we have a demand right there. And see how price reacts around this zone. Price reacts around here on the hull moving average. You can see the pin bars, and see on the 21-day moving average another pin bar, and this is an indication that you are going to have more buys in the market. As you can see, in fact, it was the starting point of the entire trend. It's a double confirmation of two indicators. So that was our video. I hope you understood my explanation. So thanks for watching, guys, and keep it